Welcome to Hotel Ownership Unplugged. It is a monthly series that Tommy and I will be doing, talking about the different aspects of hotel ownership. And so tonight we're going to walk you through the entire hotel ownership process. And every month it'll be different. We may talk about raising capital. We may talk about finding a management company, having a conversation with the broker, sales and marketing, a whole bunch of different things. But tonight we're going to walk you through the entire process. So before we really get started, just want to let you all know that it's definitely going to be engaging, um, and we'll definitely leave some questions and stuff at the end for you all. So feel free, you can ask throughout the webinar. It's just that sometimes we may say hold it to the end. If it's in that moment, we'll probably go ahead and answer it. But yeah, so we're just gonna have a great time talking about hotel ownership and even for the folks who want to passively invest, this will work for you too, and the folks who want to own. So I do have a question before we really get started. I know I said it like 500 times, but how many, so that way we can know the tone, how many people want to invest or own? They just want to passively invest or own.
I like the both answers. Those are good, right? I mean,
That's good. Yeah, okay, cool. So
yeah.
we'll be talking about some different strategies. All right, let's go. All right, so y'all can see my screen. Okay, so today we're gonna have an introduction, talk about from the front desk to the top desk, our backgrounds and everything, what makes a hotel successful. We're gonna talk about a hotel ownership thesis, the different pathways to hotel ownership, and like I mentioned before, we'll leave some time for Q&A. Oh, so myself is Davon Rees. For those who don't know who I am, if this is your first webinar with me, welcome. If this is not your first webinar with me, welcome again. You will probably learn something new. I promise you, every time I do a webinar, some people tell me that they learn something new each and every time, okay? So yes, so they call me the hotel queen or the hotel diva, and well, because I love Beyonce. So just a little bit information about myself for those who don't know. I've been in the industry for 15 years. I started off as a front desk agent, and I navigated my way from the front desk, as my business partner would say, the top desk of hotel ownership. So I have experience in feasibility studies, management, asset management, development, consulting, operations. Throughout my career, I've asset managed or my portfolio $1 billion, author of 3 books, including How to Buy a Hotel that I authored, 30 million, and then some books that Tommy and I worked with that he'll share in a few. And then currently the assets under management is $30 million. My 3 hotels in my portfolio. And then we have, and then I've been featured in just about everything except for Essence. And I have been awarded for Georgia State University 40 Under 40, International Society Hospitality Consultant, Emerging Leader, top 100 influential hospitality leaders. So just to let you all know that you are in great hands. All right, Tommy, the human calculator. Let us know who you are.
I mean, yeah, I like the title. I told Davon it's pretty. It's I don't know that I'm that good, but I feel like I'm pretty decent with numbers. Yeah. So Tommy Byer, Davon and I go back about almost 15 of those years, maybe 12, something like that. But we've known each other ever since working through the American Hotel Lodging Association, Under 30 Gateway Council. So it's a long name, but essentially it was taking some of the top young people at the time. Unfortunately, we're still not under 30, but that's all right. And it was putting our heads together and just figuring out a way to make the industry a little bit more friendly to younger people. Yeah, so I also started out in operations. I started out parking people's cars. So I was a valet at a 4 Diamond resort down in Charleston, South Carolina, and went to school for hotel management. So I went to the University of South Carolina. So I'm a Gamecock, and also did some time at at Cornell, so did some coursework there. I said did time like I was in prison or something, but it was definitely difficult going to Cornell, but I learned a lot. So Davon, you want to go to the next? Do you have the next slide? I don't know if you have another
Yeah,
slide on.
yep.
Yeah, so so it's pretty similar to Davon. I haven't been in Essence either, but maybe one day we'll both get in there. I don't know. So, and I need to redo this because actually under management right now, I've got over 100 million.
I thought, yeah, that sounds about right.
Yeah, because to give you a breakdown, what I do, I have my own asset management and consulting firm. And so I help new clients with pro formas. I help them choose brands, choose management companies. I help, and in the hotels that I asset manage, of which Davon owns 3 of, I help those properties. I just make sure that the properties are performing as best they can, whether it's improving revenues, tightening up on expenses, changing brands, kind of you name it. So that's where my background is, my experience is. If I go back a little bit, kind of backtracking, once I got through, once I stopped parking people's cars, I eventually became a general manager. I was 22 years old, my first GM job. I general managed a few different hotels. Then I moved to a corporate role. At one point, I was overseeing 15 different hotels. The largest one was a 500-room resort in Orlando. And also have a lot of experience with smaller properties, boutique properties, kind of all over the board. I've written 3 books, co-authored 3 books that Devon and I are going to push out here pretty soon. One is How to Hire a Management Company. Another one is Avoiding Common Pitfalls in Hotel Ownership, and it's kind of like geared towards new hotel owners. And then the last one is How to Analyze a Hotel Deal. So essentially, we spent some time seeing what books were out there on hotels, and we saw kind of gaps in the market in these 3 areas. We feel like people should know how to do these types of things, and people aren't writing about it. So we took that opportunity to do that. I've written about 18. I've been published about 18 different times through all these different platforms here. Won a ton of different awards, from General Manager of the Year with the Georgia Hotel and Lodging Association, or General Manager of the Year with the management company I used to work for. My properties have won a lot of awards. I love winning awards. Now it's now I get excited when the hotels that I asset manage win awards, and more importantly, when the owners make a lot more money than they did before I was working there. So
Doing a great
yeah,
job.
excited to be here with you guys. Appreciate you carving out some time this evening. Looking forward to kind of letting our hair down and telling you all about hotel ownership.
All right. So the 3 hotels that's in my portfolio, we have the there we go. We have the Home2 Suites, and Tommy is an asset manager on all 3 of these. So he's been doing a phenomenal job. He's been making our hotels more money. So he's doing great. So anyway, so we have a 85-room Home2 Suite in Arena, Oklahoma. That was the first one that I acquired outside of working in corporate, and acquired that with my business partners, Mike Ely and Nate Barger, in 2020. That's the one that made news. So if you heard of me, you probably heard about the story. And so I bought that one for about 8.3. We bought it for 8.3 million. And then and this is a extended stay hotel. So meaning if you never stayed at a Home2 Suites or extended stay hotel has like a living room and a kitchen, and they're designed for folks who want to stay there for at least 7 days, right? You could stay there for a year if you want to. Actually, as a hotel owner, we would love for the guests to stay there for a year, right, Tommy? And then we have the Staybridge Suites in the middle. That's 145 rooms. That's in Indianapolis Fishers. It's an extended stay hotel as well, and it's a part of the IHG family. And then we have the 86-room Hampton Inn and Suites in Scottsburg, Indiana. It's outside of Louisville. And that's like a quasi extended stay because it has regular rooms, and it does have some suites with the kitchenette and the full refrigerator where folks can stay a little bit folks can stay a little bit longer. And so we'll be talking about the different types of hotels in which we recommend that'll be good for first-time hotel owners. So we bought these two, the Staybridge and the Hampton Inn, for about 17.8 million. So this is me. Unfortunately, I do not have a picture of me when I was at the front desk. Tommy, do you have any pictures of you when you were valet?
I may have one. You know what? They made us wear these ridiculous outfits with like the knickers and all that stuff and the little golf hats. So I think I've
Oh,
got one. I'll
wow.
take it. Yeah,
Oh,
it's
wow.
not flattering. No.
Especially during the summertime. But yeah, so phones weren't hot back then like it is now. So I didn't went through so many phones. So if I did take a picture of my phone, it's no longer here because there was no really place to store it other than your SIM card. But anyway, so this is me when I worked as a front desk agent at the Hyatt Regency Atlanta. That's actually probably one of my first headshots. And I was, like I said, I was a front desk agent, and that was like taken right across the street at the SunTrust building. Let's see, trying to take this off. So anyway, all right. So, and then this is me now. Well, kind of. It's like 3 years ago. This is when we were at the Staybridge Suites. We had our investors retreat. That's my son. He was 3 at the time. He's 5. And how I came from the front desk to this space, I took a non-paid internship at a consulting firm, and that's where I learned about hotel ownership. So Tommy and I, our trajectory is a little different. I'm sure he'll talk about it. How he came from operations into the transactional side, which is the ownership side. And so that's how I learned about it. I learned about it through taking a non-paid internship, fell in love with it, try to wrap my brain around the numbers and the complexity of it, and how to, structure the deal, and how to raise capital. And I figured the best way to learn about hotel ownership was working with hotel owners directly. And that's what I did at my my internship. And then when I moved up, working for a firm in Boston, fast forward, I, in 2017, ended up starting my own company, and in 2020, end up co-buying that hotel. So there are over 59,000 hotels in the United States. I usually do a trivia, but I'm going to change it up a little bit, so I'm going to do it later on. So there are over 59,000 hotels in the United States. And we're not even talking about the ones that are waiting to be developed. And so what we're going to talk about throughout this presentation is to help you get ready, because 59,000 hotels is a lot to navigate. And so we're going to give you strategies so you can learn how to find and analyze and see which best deal works for you, because the deal for you may not work for me or Tommy, and vice versa. So, and we're going to talk about what plays a part in that. So hopefully you got your notebooks handy. So y'all ready to go? Y'all still with us? Yes. All right, so we're going to debunk some myths. You personally have to have millions of dollars. You personally have to be a millionaire, and you have to have prior hotel ownership or hotel experience. That is not the case. Although Tommy and I, we do have hotel ownership experience or hotel experience. A lot of the owners, they don't have hotel ownership experience. Matter of fact, I've met more owners without it than I have owners with hotel ownership or even worked in a hotel. I actually think the hotel industry would be a little better if folks actually worked in the hotel, so they will understand things a little bit differently. So some organizations for you to join, I think is good starting off, will be NABHOOD, which stands for the National Association of Black Hotel Owners, Operators, and Developers. Their goal is to increase the percentage of Black hotel owners. AHOA stands for the Asian American Hotel Owners Association. It's predominantly Indian, but anybody can join it. They have regional conferences, national conferences, and they're really big on education, and they're really big on advocacy. So meaning, they want to support the hotel industry from a legislative standpoint. So once you get into ownership, you'll understand it, because, you're a business owner, you pay taxes, you want your voice to be heard, right? And so the hospitality industry, we generate a lot of jobs, and we generate a lot of economic drivers for a lot of parts of the country. And so we have issues. Basically, when Airbnb came out, that was a threat to the hotel industry, right? And so now you see, which, sorry if there's any Airbnb operators or short-term rental operators, if you notice, there are a lot of legislation pushing back on Airbnbs or short-term rentals. Well, you can thank the hotel lobbying groups for that, because it was taking money out of our pocket. And it's not fair if hotel owners, we have to adhere to certain rules and regulations and other folks don't, right? And so not only the neighborhood groups, but hotel groups as well fought that. So that's what I mean by regulations and fighting for our voice to be heard. LHA stands for the Latino Hotel Owners Association. Their goal is to increase the percentage of Latino hotel owners. And then you have the American Hotel Lodging Association. They're actually one of the oldest owners association or hotel association. And again, they're just helping out with the legislative efforts. And then they have different state chapters. So just about every state chapter has their own lodging association. And then they have they used to have a conference every year, HX. And that's actually, I think, where I first met Tommy and our group. And they have just different conferences once a year, where you get to see the different vendors. So there are many more industry conferences. I think those will just be really good for first timers, because in my opinion, there is more educational, as opposed to the conferences that Tommy and I go to. It's like hotel owners are like 100 hotels. So they're not talking about the fundamentals of hotels. They're talking about high level issues and how we can work together and make more money. That's pretty much what the high level ones are. Okay, so let's see the benefits of hotel investing. So we have, tax benefits, which meaning you can write off the depreciation, especially if you're investing directly into the asset, you should get a K1. And then hotel discounts is probably one of my favorites, where you can get discounts. Job creations is another one of my favorites. It's really career creation, because hotels are one of the only industries where you can start off as a valet attendant, and then you get to asset manage billion-dollar portfolios, right? Same thing with me, a front desk agent, and you can own. Is one of the few industries where you can do that. And so I love the fact that, people can come in as an entry-level position and work their way up to become a general manager or regional vice president, and really change their family lives, right? Some of the hotels we came in because we brought benefits and a management company and systems that families' lives changed because they were able to get benefits, right? And then diversification, meaning you're diversifying your portfolio. So what makes a hotel successful? You have the location, brand, and operator, right? So you have the location. If you travel to Disney World, you're traveling to Disney World, right? You're not traveling to Disney World. You're not traveling to a hotel just because of the hotel. You're traveling to a hotel because it's near Disney World, right? And you want to stay at night. So location, because hotels are still real estate, and I think a lot of people forget that. So when you think about the location, why would this person stay at a hotel, right? So, if Tommy's bringing his wife and kids, on a vacation, he may think about differently, as opposed to if it was just him and his wife, right? So like if I'm going with my son, I'm like, okay, I need like extra room so he can run around and free breakfast. That's what I think about, but probably, well, I'm a little different because I don't really care. But if I'm like going on a girls trip, they probably not gonna want to go stay at Hampton Inn, right? They're probably gonna want to stay at something like the Kimpton or, Four Seasons or something like that. You know what I mean? So, but it's all about the location, right? And I talked about the brands. The brands are important too. So there are like over 100 different brands. Tommy, do you even know all the brands? I don't know all the brands because it's
You know what? I pulled it up the other day. I found there was 1,200 brands, but I mean,
it's 1,200.
Like like take an example, Marriott. How many? Here's a trivia question.
Oh,
Marriott. How many
yeah.
does Marriott have? Anybody? Like, tell me a number. Throw it in the chat. Do they have 10, 50, 100, 20? How many brands? Not hotels, but brands. So brands, we're talking like Courtyard, Fairfield. Okay, here we go. 37, 28. Some guesses coming here. 40.
The closest one will get a copy of a book. Let's see. I think I already see the closest one.
And it's crazy though, because if you don't pay attention to the news, you won't realize that they just picked up City Express down in Mexico, which is a whole nother brand.
Look, Genevieve just put it in the, she put the link in the chat. Let's see. The closest one. Wait a minute, because they just added one. So it used to be.
They added like two. I think they're at 35 now.
Oh, they're at 35.
They were at 32 like a couple months ago, and they picked up City Express, and then they did Studio Res.
And you know what? That link that you just shared, Genevieve, is probably not. It's probably not even updated because they just bought a new brand.
Yeah.
Oh, really?
Mm-hmm.
Yeah.
That's what I'm
I
saying. The
believe it.
brands they just keep adding. They just keep adding brands. The STR can't even keep up. Let's see. So who would be the? Oh, they in the middle between King Jeremiah and Angela Davis.
Just do like we'll do a random number generator and pick one.
Oh, they're in the middle. Well, you know what? I give them both a free book
There
because
you
they
go.
got they the closest to it, so they got to send.
You get a car. You get a car.
You get a book, so they got to send me a note. Let's see, I got to send me a note. So
Yeah, so when we talk, I'm gonna jump in real quick. So you talk about brands, though. Obviously, like some of the top three really are, when you talk about like Hilton, Marriott, Hyatt, IHG. Those are some of your, kind of premium brands, as Devon will call them. Then you have Choice, Wyndham, Best Western. There's a lot of, and then within those are your parent companies, right, or the franchisor. Then within that, then you have all the different sub brands. So Choice has Comfort Suites, Cambria, Quality Inn, a bunch of different ones, right? And then IHG has Holiday Inn Express, Holiday Inn, Crown Plaza, Kimpton. So and then so the brand is important. And lastly, and I think some people lose sight of this, is the operator, right? So the operator, it can be really a couple things. One, if you're going to have a management company, when we talk about operator, we're really talking about the management company, a third party company that's running your hotel. Or if you don't have a management company, then the operator is really something between you, the owner, and the general manager to an extent, because the general manager is the one operating the hotel day to day, kind of pushing the buttons and making the decisions. So for the most part, when we talk about operator, we're talking about management company. So, there's been cases where we've decided to take one management company out and bring in a different management company, either because the other one had hotels nearby, or they were more closely located to, where this property was, or maybe, it's not all about the fee, but maybe their fees were a little bit less than the other management company. Maybe they had a better track record of managing expenses, but you'd be surprised that, the decision of, who's operating your hotel can have a huge impact on how well it performs. But if you have it in a bad location and you don't have the right brand on it, the best operator in the world isn't going to make that hotel successful. It's just not going to happen. So if you put a Ritz-Carlton in, the middle of the desert and there's nothing around it for, 1,000 miles, it doesn't matter. I mean, that's probably a bad example, because the Ritz-Carlton's an example of a hotel that people will come to just because of the hotel. But, the point is, if there's nothing around it, it's a bad location. And you guys can see this. I'm going to stop it real quick, but you guys can see this. Think about where you live and drive down the street. You all know right now of a location where there's been 10 restaurants since you lived there. And it's not the restaurants, it's the location. It's a bad location, right? And you might have seen that with hotels too. It's been this property, this brand, this brand, this brand. It's just not working. So
I do want to add to what Tommy just said about the brands, right? So the brands, they have diversity programs. Well, I knew it was over 100. I didn't know it was over 1,200, but it makes sense because the brands within the brands. And that's why we didn't list them all. But I did list these. We did list these because one, they have diversity programs, and I personally, in my opinion, I think these are good brands to start off with as first-time hotel owners, right? They're more economical. They're easier to get into from an economical standpoint, meaning money-wise. So you have choice. They have their emerging markets program. They just changed the name, I forgot, but it's not emerging. But anyway, they have a program for like Black people, Latinos, women, veterans, and so they incentivize those communities to get into hotel ownership. So the brands to start off with would be, brands would be like a Quality Inn will be good as a first time hotel owner. Clarion Inn will be good. Sleeping, those type of brands will be good to start off with. They're smaller. The labor model isn't as complex, and so you can really, really understand the process, right? Hilton, they have brands such as Spark now, so they can compete with the Days Inn, which is Wyndham. Days Inn is Wyndham, and then they have Hampton, probably, which is their most profitable or recognizable brand, and True is like their answer to the Moxie. Intercontinental Hotels Group, in Hilton, they have a diversity program as well. And then Intercontinental Hotel Group, they have their Lift program, same thing. They want to incentivize more minorities and get into the hotel ownership space. So Holiday Inn Express, Staybridge Suites, Candlewood Suites, those are great properties to start off with as a first-time hotel owner. Wyndham Hotels, they have Days Inn, they have Wyndham Inn, those type of hotels, again, it'll be good for you to start off with. And then Best Western, think of them as a credit union, and the other hotels as banks, right? So they have more of a membership model, where the other hotels are more of a franchisee model. Okay, so that's it. Thank you. Thank you, King Jeremiah. That's the name of Choice's new program. So active versus passive, I mentioned it before. What would you choose to be, active versus passive? And so we had a combination of both, which was great. So I'm going to talk more about the passive sides, and then Tommy, you'll finish us off with the active. So passive, and regardless if you're doing passive or active, you definitely want to set a vision, set a budget, and determine your pathway, right? So set a vision of where you want to be, what you want your hotel to look like. Do you want to passively do it? Maybe that's a strategy. You passively invest. I got some hotel investors on the line now. They could potentially passively invest, and then, a couple years down the line, they could potentially own, because through the bank lens and the hotel lens, they actually have hotel ownership experience. Okay, there we go. Set a budget, right? Hotels cost money, so you definitely want to know, how much you can actually afford, right? So, and a lot of people think, oh, well, I know all these millionaires. Yeah, you may know Warren Buffett, but it doesn't mean that he's going to invest in your property, right? So you need to be realistic on actually how much you can buy and how much you can finance. I always say try to stay with 5 million or less, because the down payment is about 20 to 30%. And so meaning you have to raise, close to $1 million. So that's why I always stick with that number. And then again, determine your pathway, which we're about to talk about. So there are different ways that you can invest. You can use lines of credit. You can use your savings. You can use retirement. You can use and what I mean by retirement, like the cash value of your like your self-directed IRA or EQRP, the cash value of your life insurance, equity. Now, again, both of us are not financial advisors, so if you have specific questions, definitely recommend that you work with your financial advisor, CPA, because everybody's situation is different, and I wouldn't know which would be best for you to do. And then crowdfunding, meaning you can raise capital through crowdfunding as well. So 4 pathways to hotel ownership. It's really like 5. I probably need to change it, because it's crowdfunding where you can invest. That's actually both, where you can invest passively through crowdfunding, and crowdfunding is pretty much folks just coming together, buying a hotel or buying a project. And you can also raise money through crowdfunding. REITs, which stands for Real Estate Investment Trust. That's where you pretty much like investing in stock, which would be the 5th way. Because with REITs, the REITs have to give what, and Tommy would know better than I do, they would have to give what, 90% of the profits to the shareholders, correct?
So that's 95%. Yeah.
It was 95. So it's 95% they have to give they have to give the profits to the shareholders. So if you invested in a REIT, typically you get a dividend on a quarterly basis, right? But you don't get direct access to invest in a deal. You're investing in a REIT. So remember that. So you can't say, and if some REITs you can come in at $20. If you've invested in $20 overnight, you won't become a millionaire. So some people may get a little excited. That's great. That's a great start, but just also be realistic. Private investing is where you would invest directly, directly with the investor. Like I said, I just saw some names. I don't want to call them out unless they want to. Some of my hotel investors, in the on the call, where they can invest directly with the hotel owner, and it's a part of their balance sheet. Or you could do hotel syndication, which is the active way, where you put the deal together, raise capital. So I will be considered an active investor, right? Putting the deal together, talking to the investors, talking to the brand, dealing with the lenders, bringing on somebody like Tommy, or changing the management company, making those type of decisions. All right. So the first thing you want to do after, and this is a part of determining your budget too, creating your investment criteria or investment thesis. Remember, I talked about in the beginning, there are over 59,000 hotels. Well, this is why. Because what kind of hotel? Remember, we talked about the different brands, right? So there are different types of hotels, because the brands, they want to attract every single guest as possible, right? Every guest is different. So that's why there's different types of hotels. You have luxury, which is your Ritz-Carltons and Four Seasons of the world. You have your economy, which is like your Days Inn and Motel 6s of the world, right? You have your, upscale, and you have your mid-scale, to keep it simple, limited service hotels, which is like your Hampton Inn, meaning it doesn't have a food and beverage component. Full service hotels, they have 3 meals, meaning breakfast, lunch, and dinner. And then you have, all suites hotels, like an Embassy Suite. And then you have your extended stay, which I talked about before, where it's they're designed for longer stay guests. So you get breakfast in the morning, and maybe a manager's meal or something, which is some like appetizers and a drink at night. And then also think about, when do you plan to invest, right? So set a deadline. Do you want to invest first and then buy? Maybe you invest within 2 years and then you buy a hotel within 5 years. Figure out what works best for you and be realistic. Also, what kind of hotel probably determine when do you plan to invest. If you plan to get a smaller hotel because that's all you can afford, then you may have to think about, you may have to put more time in, or invest in a little bit more money to bring somebody on to help you. Where do you plan to invest? That's huge. Do you want to do, like my thesis, I don't do international because that's just not my thing. I don't know the players, meaning the management company who would do it. And it's just, that's just me personally. I personally would probably buy a condo within a hotel and then just split the profits, because they get to deal with the other stuff, right? But domestically, I don't like to look at stuff over 2 hours away on a flight. Like I wouldn't look at anything in Alaska or Hawaii. It just doesn't make sense to me, because I'm here in Georgia, have a little one. If something happens, then I don't want to do all that, right? But again, that's me, right? Maybe if it was like 5 years ago, it'd be different. Or probably 6, 7 years ago. So why are you investing? Why are you doing it? Are you a cash flow person, or are you an equity person? That's something you need to think about, because if you're a cash flow person, then you need to be looking at more of, limited service, extended stay deals. Those are the type of deals you need to be looking at, right? If you're an equity person, then you need to be looking at, full service, or branded, really strong brand. So Hilton or Marriott, those are more equity plays. If you want both, a combination of both, then you would get like a Hilton Spark or something, or Marriott Fairfield, something that's a limited service or extended stay with those type of brands. Now they're a little bit more expensive, but it can be done. And then how are you going to invest? What are you going to do? Are you going to bring in a group of people? Are you going to do it yourself? Those are the type of questions that you need to be asking about. We have it in the what do you call it? The ownership roadmap, which includes the analyzer that Tommy's going to go through in a minute. Okay, so REITs, let's talk about REIT search. So there are about 18 different lodging REITs. So this is more of a passive opportunity. How to find REITs, you work with the brokerage firm or financial advisor. You could use Morningstar for research. You can go to REIT.com to look them up. So like I said, it's about 18 different lodging REITs, and you can actually use an ownership thesis to help you determine which one to invest in, right? So maybe a strategy could be, hey, I can't really afford to invest in the Four Seasons directly, because the Four Seasons probably looking at a minimum $250,000 to $1 million, Tommy, to invest in the Four Seasons.
If they would even allow you. I mean, those
if they
are all
allow it, yeah.
right. Yeah. Those
If
are
they
all
allow
pruned. Yeah.
exactly, right. Or like a Mandarin Oriental or something like that.
Yeah.
But if you still want to invest luxury, there are some REITs where you can still get that feeling of taking advantage of investing in luxury hotel REITs, right? So there's some opportunities, but before you start looking, it's best to have your ownership thesis. If you're more of a limited service person, then maybe look at REITs that have a combination of limited service and full service, and just trying to just see what this in their portfolio and how they perform before and after COVID and during COVID. So that's what I mean by doing your research, right? What is their performance? What are the returns? Again, just a passive way, like investing in stock, right? Questions to ask.
Usually
Go
the
for it.
REITs are pretty dividend heavy for the most part. And as Devon said, you can actually, if you invest in a REIT, you can still get hotel ownership discounts through the REIT at the hotels they own. So
that's a question to ask, right? So if you want to invest in a REIT and they say that, I don't know if it's a certain price point, but definitely that's a question that you should ask, right? Does it match your investment thesis? How's the historical performance? Will I be able to get a discount? You know what I mean? So maybe that'd be your determining factor. Hey, crowdfunding. Typically you have to be an accredited investor. For those who's not an accredited investor, who don't know what an accredited investor is, you have to have a net worth of $1 million or more, excluding your primary residence. You have to have an income level of 200,000 or more. Some crowdfunding sites, Investor, CrowdStreet, Realty Mogul. You work with the financial advisor or brokerage firm to help you find one and to help you do your research, because you'll probably be investing directly into the asset. Work with the financial advisor or CPA to see if it makes sense, because they may tell you where it's best to pull the money from a tax perspective. That's really why you're doing it, right? So questions to ask, what's the return? What does the ownership group look like? As far as experience, that's really the key thing, because it could be a really great deal, but if the ownership group, they don't know what they're doing, you might as well just, throw the money in the drain, because they don't know what they're doing and you don't know what you're doing. So it's the blind leading the blind, right? So you really want to work with, and nothing is guaranteed, right? Nothing is guaranteed, but typically with a strong ownership group, they've done it before, they can do it in their sleep, and they know what to prepare for. They know how to weather the storm. Some of these, hotel owners, they've been through maybe nothing like COVID, but they've been through a recession, so they know how to plan for it, right? They know what to do, how to handle it, okay? Know how to weather the storm. And then also ask what's the minimum to invest, and when you would get, your what's the exit strategy. Again, a lot of those questions are in the workbook. So Vestors is my crowdfunding platform. We actually about to have some deals coming up, so both accredited and non-accredited investors can invest, and think of it as a marketplace for commercial real estate investing. You go to vestor.com. That QR code is just for you to pull it up, and definitely get on our mailing list. So questions to ask before you get into the private investing, same thing. What's the return? ownership group, what's the minimum to invest? These are some high level questions that you want to ask as many questions as you possibly can. If you don't know, like I said, have your lawyer, have your CPA, have your financial advisor look at it. Because again, you just want to make sure that you're protected. Are you signing the proper documents? Again, do as much due diligence as you possibly can, because investments are risky. There's no guarantee. Like if anybody say it's a guaranteed return, you might as well walk away, because nothing is guaranteed, especially in hotels. It can be literally a hotel next to Disney World, and if they say it's a guaranteed return, walk away, because look what just happened with COVID. The hotel was shut down. Like it could be something happen. It could be a fire. Anything could happen, and then you don't get any returns, right? So you just want to be careful, because hotels, they're very cyclical. So in the economy, when the economy is doing well, the hotel industry is doing well. When the economy is not doing well, what's the first thing that's cut? Travel. That's the first thing. Now I don't see it's too much, because I think people with so much pent up demand from COVID. But so yeah, private investing, as I talked about, investing directly into the asset, working directly with the sponsor. So active, this is Tommy, this is all you, buddy.
All right, this is for all you active folks out there. Yeah, so if you're an active investor, you still need to think through some of the same things, right? The investment criteria. I know Devon went through that, but a lot of people don't spend time thinking about that. You've got to think about what kind of hotel you want to buy, where is it going to be, how much money can you spend on it? You have to think that. What kind of brands do you want? So then the next thing you're going to do is you're going to assemble your team, right? So within that team, maybe you want somebody it'd be a good idea to get somebody who's got experience in hotels, right? So whether that's operations or management or what have you, or maybe a consultant or an asset manager, you want to have somebody like that. Maybe you've got somebody who's familiar with the debt side of the world. They can help you with that. Maybe somebody who's really good at raising capital. So maybe that's, another kind of part of the team. You just want different people on the team who have different strengths, right? Just like, you wouldn't have a basketball team full of a bunch of point guards, because, that wouldn't go well for them, generally speaking. You need somebody who's tall as a center, right? Just like football team can't have a bunch of quarterbacks. You got to have all the different positions. It's the same with, an active investment team. So, the next thing you're going to do is you're going to find the hotel, right? And we'll walk you through a couple of different websites and areas you can go to find a property. That might be, we'll talk through that in a second. But you're going to go, through all these different, either maybe brokers or hotel sites or, other owners or whatever to find a property. Once you find the deal, you've done your analysis, you feel good about it, you've done your pro forma. Then you're going to submit your offer, right? You'll submit your LOI, see where that goes. If they accept it, you're going to move on. You'll move on to working on the PSA, which is your purchase and sale agreement. And you'll go through your due diligence period. So you're ordering all your inspections. And I know we're going fast on this, but people have other things to do on a Tuesday night, although we can go for hours on this for sure. So but you'll do your due diligence, right? And I always equate it back to if you've all bought a house, you're familiar with that process. You got to do property inspections. You got to get your financing in place and all of that. And then at some point, you're going to transition to property. You'll take it over, and you'll be a hotel owner. Then you can get featured in Forbes, just like Devon, and you can beat her to Essence and all that as well. So. That's the acquisition process for active investors. So, we talked about this a little bit a second ago. There's a bunch of different sites you can use. And, if you've been in the commercial real estate world, these aren't going to sound that different. You've probably been on LoopNet before. You've been on Crexi before, or 10X. 10X is more of an auction platform. But within all those sites, you can create an account. You can set up criteria that says, hey, I'm looking for the criteria can tie back into your acquisition criteria. So it'll say, I want a hotel within these 2 states or within 250 miles of my zip code or whatever. Again, just like you're buying a house, you'd put square footage, number of bedrooms, all that. It's just like this. I want a hotel that's 100 rooms or more, or 100 rooms or less, or what have you, or I want a deal size that's $5 million and below, or whatever the case is. And then they'll automatically start emailing you, lists of hotels that are available. And then you can work with different brokerage firms like CBRE or Hunter Hotels or Marcus and Millichap, or there's a million hotel brokers out there. And they'll put you in touch with the brokerage teams that are kind of focused on the hotels you'd like to buy in the areas that you're interested in, because they've got specific brokers and experts in all those different markets. So, and then those guys will put you on their list. And then before you know it, just like, I spend 10% of my day deleting deals that I'm not interested in, right? Because maybe I see 20 deals a day coming across my desk and I'm not interested in 19 or 20 of those, right? And you'll get to that point too, where you'll just say, you know what, I've got my acquisition criteria so well defined that I don't care. I'm not kind of distracted by this shiny object syndrome. So if you want to buy an economy hotel, you want to buy a Days Inn because that's what you can afford. You think it's a good, first deal for you, and a Hilton Garden Inn pops up, you got to be willing to delete that, because that's just you're gonna go down the road and kind of chase this deal that you may never be interested in. So you got to make sure you don't fall into this shiny object syndrome. And I'm guilty of it too, right? Because Devon said she won't do international deals. I probably would, because I've got a lot of friends and connections in different Caribbean markets and things like that. But you can spend a lot of time on that, knowing that the chances of you doing it are probably pretty slim. So, what's next on the list for us, Dave? All right, so yeah,
There.
so go ahead. So yeah, so next thing is, if you're an active investor, you're probably going to be the sponsor or the GP. So you're the one putting the deal together. You're the one raising the capital, and GP meaning general partner. And then the passive ones are really the limited partners, or the LPs in the deal. So sponsors, there's a lot riding on a sponsor's shoulders. They have a lot on their plate. If you don't know the industry, to go and be a sponsor on your first deal, it doesn't mean it's impossible, but it's you got to do a lot of work to get to that point. And you want to be able to speak clearly to the deal you're working on and the opportunity that's in front of you, because you're going to have to overcome this hurdle of, I don't know the industry, because that's what that's what people may throw up against you and say, like, well, you don't know. What do you know about hotels, right? So you have to be able to kind of speak to that.
Yeah, that's it. And then you can pull up the analyzer.
Yeah, so we're gonna run you through this deal analyzer that we created, and the purpose behind it is, let me see, I'm gonna share my screen here. Yeah, so the purpose behind it is that, so if you think about it, when you're working on a deal, you're going to do a pro forma, right? Hopefully you don't just take the pro forma that the broker did and just decide to put it in an offer on the deal. You can't do that. People do it, but I would highly recommend you don't do that. So you want to create your own pro forma, and to do a full-blown pro forma, it's going to take you a couple hours, especially if you're not familiar with how to do a pro forma. So we created this high level deal analyzer. So I'm going to run you guys through it real quick. And the intention of this is to just quickly screen the deal within, call it 20-30 minutes or less, and then decide, does this deal make sense? Should I then take it to the next level and do a more full-blown analysis? Because if you spend 2-3 hours analyzing every deal that comes across your plate, you're going to get burned out, and you're going to fall into that paralysis by analysis, right? You're going to overanalyze the thing, and you'll probably never get a deal done. But if you now let's say you review 50 deals and you find 3 or 4 that you like, and then you can do this analyzer, then it becomes, a little bit more manageable. All right, so look, it's easy. All the cells in blue are input cells. So this is, first you're going to fill out your deal data. You're going to put the name of the hotel, the number of keys or the number of rooms, and then the year the hotel was built. And the year is built is important for a lot of different reasons. But when you talk about branded hotels, you sign a franchise license, and the older the hotel is, generally speaking, the less term you're going to get from a franchise. So we can get into that at a different time. And also, again, just like anything else, the year it was built is important because it's going to dictate, okay, what kind of money do I need to put in the hotel, what's the condition of the roof, and all of that as well. All right, so we're going to put in this case, it's just an acquisition one. We have a similar deal analyzer for new builds, but here we're talking about an acquisition. So we're putting in the price. We're paying 12.5 million for the deal, and it's already calculating your per key price. Working capital is the money that you're going to need to get this business started, right? So you're going to have to put some money in some bank accounts. You're going to have to fund some payrolls, maybe pay some, accounts payable, pay some deposits, that kind of thing. So that's your working capital number. Key money is money that's given to you by a brand, really, particularly if you're changing brands. In some cases, if you're relicensing. So let's say I'm buying a Days Inn and I want to convert it to a Spark by Hilton, like Davon talked about. Hilton may give you some key money to make that a Spark. And they call it key money because it's usually given on a price per key basis. So it would be something like, $5,000 per room. So, and you put it in as a negative because it's taking away from the total cost of your deal. So let's say you got $5,000 per room. Then the PIP is a property improvement plan. That's essentially the renovation that the brand is going to make you do to the hotel. So they're going to come in and say, hey, you need to redo, change the mattresses or put new TVs in or change carpet or furniture or whatever the case is. So you're going to have to plug in a number for that. And then last year you have to plug in some closing cost estimates. So that's going to be, money that you paid to lawyers, or maybe you had inspections done on the property and that kind of thing. So lastly, we come out to the total price. So total price for this deal is 14.3 million, or 119,000 per key or per room. So we're done with our deal data. Now we're moving on to the historical information. So we're going to go to the broker or to the seller, and they need to give us at least 3 years worth of historical information on the property. They need to give us and every deal is a little different. If it's an institutional seller, you're going to get all the data you want. If it's a owner operator, that information may be hard to come by, but try your best to get 3 years worth of information. You want your occupancy is the first thing you're going to put in, right? Occupancy is an easy calculation. It's just rooms sold divided by rooms available. And you're going to have to, bear with me. As Davon says, I'm a human calculator. I've been in this business a long time, so these are really easy calculations for me. But it's simple. I sold 75% of my rooms for this year, right? ADR is your average daily rate. The calculation for that is your room revenue divided by the rooms sold, right? So that's just telling you, for the rooms you sold, this is the average rate that you sold them for. And the real number a lot of people pay attention to is your RevPAR. It's your revenue per available room. And the reason RevPAR is important is because it takes into consideration all the rooms you had in the hotel. How many of you know hotel rooms are perishable product? You can't sell the rooms that are available tonight, tomorrow. You can't sell them. They're gone. Just like an airplane. They can't sell those seats on the next day. The flight is gone, the seats are gone, it's over with, it's perishable. So that's why RevPAR is important. You don't really care if you had an ADR of $1,000 and you sold one room and you made $1,000, right? But if your RevPAR was $100 and you sold, $100 times however many available rooms you had, you made a lot more money, right? Okay, it's automatically calculating your room revenue. If you have food and beverage, you put that number in here. Miscellaneous revenue is going to be things like pet fees, cancellation fees, resort fees, internet, telephone, all that. So it's calculating now your total revenue, and the sheet's automatically calculating your percentage of revenue here. And now we're moving to GOP. Your GOP is your gross operating profit. And to figure that out, it's your total revenue minus your operating expenses. And operating expenses are like rooms, departmental expenses. So think about like housekeepers and breakfast and cleaning supplies. It's any other departmental expenses. So if you have food and beverage, it's that. And then it's going to be like utilities, franchise fees, all that, whatever it takes to operate the hotel. That's what you're going to subtract out of it. Then you're going to plug in your NOI, which is your net operating income. To get that number, it's going to be your gross operating profit minus your, fixed or undistributed expenses, or excuse me, non-operating expenses. So that's going to be property taxes, insurance, leases, those types of things. And you're going to put all those numbers in for however many years you can get. In this case, the analyzer allows you to put in 3 years worth of information. And you can go spot trends in here. So if we look at this, the hotel went from a $90 RevPAR to 93 and to 100 in 3 years. And then their net operating income, or what people call your bottom line, went from 950,000 to a million to 1,150,000. And percentage wise, it went from 23% to 24 to 26. Okay. So you're keeping all this in mind as to what were the trends, how did the hotel perform. The last thing it's doing is it's calculating your cap rate. You guys may or may not have heard of this before. It's your capitalization rate. So it's just taking the net operating income divided by your total price. So, in this case, it's a 7 cap. If you were buying a deal if this was a 10 cap deal, so look, let's do it real easy. It's 14382. That's a 10 cap. All right. So let's just for argument's sake say it was a 10 cap. That means that in 10 years, you will have made enough money from your net operating income to pay back what you paid for the property. Get that? 10%. It's just this times 10 equals that, right? It's just how long is it going to take for me to make my money back on this deal? How many years? Right. So the higher the cap rate, the better the deal is for you. The lower the cap rate, the better the deal is for the seller. So if you're a seller, you want to sell on a low cap rate. And if you're a buyer, you want to buy on a high cap rate. Okay, so now we're done with the historical information. We're moving on to pro forma assumptions. So now we're going to say, okay, in year one, I think it's going to do 80%. It did 80% last year. And I think I'm going to take my average rate up to $130. It did 125 last year. And I think I'll do a little bit better on my miscellaneous revenue. But here's where this thing changes a lot. I think the GOP is going to go from 30% to 40%, and the NOI is going to go from 26% to 32%. And you might say, well, why do you think you're going to do that much better on the bottom line? And in this case, and this is pretty close to an actual example. In this case, I know that whoever owned it was an owner operator, and they had not done a very good job of managing. They've changed over a bunch of general managers. They're not professionally running the property. And I know that historically, a hotel like this should really be running net operating income margins of 32%. So that's what I'm going to put in this analyzer for this specific case. Now, obviously, this is just an example. Every deal is different. So if that were the case, it'd be a 10.3 cap on my year one pro forma numbers. And then I've got to just kind of plug in an annual inflation number. So I've got to decide, okay, for the purpose of this model, again, we're shortcutting it, right? If you did a real pro forma, you'd go year by year by year. We're just shortcutting this thing and creating this analyzer. So to be safe, let's say we think the market and the hotel is going to do about 3% better per year. You could change that to 2, 2.5, 3, maybe it's 4, maybe it's a hot market. So those are our pro forma assumptions. Then we're going to move to our debt assumptions. And again, all you got to do is plug 3 numbers. What's the interest rate? What's the LTV or LTC? That's your loan to value or your loan to cost. Essentially, how much of a loan are you going to get on the deal? And then what's your amortization period? So 25, 30 years, 20 years, whatever it is. And you can talk to hotel brokers, you can talk to debt brokers, you can talk to other owners or consultants, and they'll give you a pretty good idea of where the market is right now. Like if you have a really good deal, you can get an interest rate on a hotel. You could get it maybe around 7%, maybe 6.75%, but it's got to be a really, really good deal. And a lot of deals are kind of shaking out in that 8.5, 9, maybe 9.5% range on interest. And again, the better the deal, the more debt you're going to be able to get. So if you have a really good deal, maybe you're getting 70% LTV, maybe 75. And if the deal's not as good, it's going to be less. It's going to be 60, 65% because the bank is going to require you to put in more equity because they want to kind of de-risk the deal. So it calculates the loan amount and the equity amount, right? So those are your debt assumptions. Lastly, we got to talk about when are we selling this thing and how much are we selling it for. So in this model, the longest you can hold is 5 years. So we plugged in 5 years here. And we're going to plug in the terminal cap rate. I just taught you guys what the cap rate was. The terminal means when we sell it, what cap rate are we going to sell it on? Remember, we're buying it essentially on an 8 cap right here. And you can plug whatever number you want in there. Remember I told you if you're a seller, you want to sell it at a lower cap rate. Maybe it's a really good market. Maybe you think you can sell for an 8 cap, or maybe the deals, maybe there's a lot of supply coming in. You can't sell it for as much. Maybe you got to sell it at a 9 cap, right? So you can change all that around, and it'll calculate the sale price. It'll calculate. Then you have to plug in selling expenses. You're going to pay a broker something, just like you'd pay a realtor or something to sell your house. So maybe it's 2%, 2.5%, 3%. You can change that. It calculates your net sale price and then your sale price per key. So we're selling for $154,000 per room. We bought for $119 per room. Does that sound good? Good? Bad? How do you feel? We're selling for $18.5 million. We paid 14.3. How does everybody feel about that? Is that a good deal? Bad deal? What do you think? Good? The last two things this is going to calculate for you is your internal rate of return, which is your IRR, and your equity multiple. So it's already spitting these numbers out for you, right? And again, this you should be able to get done in, call it 30 minutes or less. There's some instructions here. So in case, you guys have already zoned out on me, you can go back, pull the instructions, and it'll tell you, what you need to do, and it'll kind of reiterate the things we just went over here. But this is your high level deal analyzer. I like the model. I think it's really user friendly. It's helpful. It's something that you could show somebody who is looking to invest, right? So if you come across somebody and say, hey, look, I found this deal, they might say, well, tell me the numbers. You could show them this. You could feel good about showing them this. But I would not put an offer on a deal before I did a full-blown pro forma, and that's a session that'll take a lot longer to go through. But yeah, so any questions, thoughts, concerns? You like it? You hate it? Am I still invited to the cookout, Davon?
Yes.
I have a question.
Okay, let's hear it.
Yeah, so you said to buy high on the cap and sell low. It looks like the cap we're buying at is 8%, but we're selling at a 9. So is this a good deal?
Yeah, well, look, in the case of this example, it is a good deal because the IRR is a 23%, and a 2.48 equity multiple. Those are pretty good numbers. The real reason the deal works is because we've taken our NOI from 26% to 32%. So you'll be cash flowing all along here. Cap rates are going to be dictated in the future by, what are interest rates? What's the cost to build? In some cases, people are obviously pricing it per key. So some people will say, you know what, I'm not going to pay you $154,000 for this per room because I can go build one for $125,000. Or you also have to think about, is there a renovation that's going to be due in 5 years, right? And then the seller, the buyer is going to go discount the purchase price because of that renovation. They're going to say, well, that's great, Tommy, but I've got to go spend $2 million on this, so I'm going to give you $2 million less for this. So those are things you have to think about, unless you've renovated it all along and you've kept it up.
Okay,
good-
so take into account multiple factors, IRR, equity multiple, and cap rate, not just the cap
Yeah.
rate.
Yeah.
Okay, thank you.
Then somebody had a question, Anne had a question, do you have to pay capital gains?
Yeah, sure. Yeah, definitely. I mean, unless you did what's called a 1031, which is a tax-free exchange, right? So you could take, the profits you made on the deal and roll that into another deal. 1031s are okay, except it puts some pressure on you, right? You've got to declare what kind of hotel or what kind of deal you're gonna do within a certain time frame that's dictated by the government, and then you've got to close within another time frame. So it puts these constraints on you to find a good deal and to do that deal and execute on it. Otherwise, you pay capital gains. And never mind, there's been some laws around 1031s, and there's been talks about getting rid of that. So you don't. Yes, and the point is, you're gonna have to pay the taxes at some point. Maybe you roll it into a trust and blah 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 blah, but somebody's paying it, whether it's your grandkids or their kids or who knows. But somebody at some point is going to pay the taxes on the profits you made. Call
Now,
recapture.
how did y'all like that? That was dope, wasn't it? Now y'all see why we call them the human calculator. Well, just a little bit. Y'all ain't see the full thing. But no, this is good. So thank you, Tommy, for doing that, because really what Tommy did, he put together the a high level acquisition model, which is in your workbook. If you need the link, let me know. But basically, it is for folks who are looking to acquire. So what's the timeline that everybody's trying to acquire a hotel?
Mine is 3 months.
Oh, wow. Okay. All right. So you ready to go. So we have a 6 month. Oh, wow. Okay. Ready to go. All right. So we have a program. So thank y'all for saying it to the end. We have a program, Tommy and I, we have an 8-week master class where, and it's not probably, but it is good for the folks who are looking to buy within 6 to 12 months because it's intense, and we literally go over through the entire acquisition process, meaning how to find a deal, how to analyze the deal, how to submit an LOI, how to how to talk to the brokers, how to raise capital, how to pretty much get you ready. And so from our program, we have a couple alum here. Maybe I think one alum, another one left. And I said I was gonna put her on a spot. I connected her with another student because they're in the same community pretty much, and they're in the process of submitting an LOI to a potential hotel, and they'll probably close on it. Right. So okay. Yeah, I think that's it. Yeah. So as far as for the program, it's 8 weeks. It's since you stayed with us to the end, and it's Gemini season, birthday season, and Memorial Day weekend coming up, it is 50% off. It's 8 weeks. Like I said, we're going to talk about raising capital. We're going to talk about more in depth. And we're going to work with you with pitching, because you have to understand how to pitch. Not only are you going to pitch to raise capital, but you have to pitch to the brands, and you have to pitch to, here's the link to the, there you go. That's the workbook. I put it in there. Then you have to pitch to brands, then you have to pitch to lenders, you have to pitch to raise capital. So we're going to work through that. We're going to work through that after 8 weeks. And so you're going to pitch to us. And so we're going to walk you through how to pitch, how to put together a pitch deck. We're going to walk you through what will be included will be resources, the workbook, and then also will be included it's going to be a higher level, we'll say higher level, but more advanced level of the analysis that Tommy was talking about. saying you don't want to submit an LOI until you do a full-blown analysis. And so we're going to walk you through how to do a full-blown analysis, meaning how to put together a pro forma to see if it makes sense. Through the class, we're going to give you homework every week, meaning we want you to find a hotel, and we want you to go through it. I know one of our students, she actually found a hotel throughout her 8 weeks, and it wasn't her, it was the seller. The seller was trying to highball her, and I don't even think that seller still sold the hotel, because they were getting a little too greedy. But it worked out because now she found a partner, and they're going to look at a deal that may be potentially better, and getting at a lower price. So definitely it's intense, and it's good for the folks who want to learn more. I put the link in the chat for the class. Like I said, it's 50% off. And the 8 weeks, it starts on May 30th. So make sure you put in the chat Unplugged, so you can get your 50% off at checkout. But it's 8 weeks. Like I said, the first week, we're going to walk you through how to the ownership thesis. Then we're going to walk you through how to find and analyze a deal. We're going to walk you through due diligence, how to select a management company. If you do decide to get a management company, it'll include a checklist of what to look for after you acquire. We'll connect you with pretty much you'll be tapping into our resources. So one-stop shop. If I don't know anybody, Tommy knows someone. So meaning to help you find a lawyer, help you finding a broker, help you finding, you're going to need a property condition assessment. You're going to need an appraisal, all of these different things that you're going to need throughout the acquisition process. So think of having consultants, that typically costs what, 50 to 100,000 they'll charge you, Tommy?
Yeah, definitely.
And you're only going to get 2 of us for 3,000. So you can't beat that at all. So like I said, I put the link in the chat. You'll get with us for 8 weeks. We'll bring in guest speakers. We'll bring in an actual lender or broker to walk you through so that way you can be prepared when it's time for you to submit for financing. He'll tell you, hey, this is what they're looking for. This is what you need to look like. This is what this is what you need to be ready for. So that way, once it's time for you to submit your LOI and time to get money or time to get funding, that you'll be more prepared. So I put the link in the chat. If you have any more questions for Tommy and I, we kept you over 8 o'clock. So Sharika said it's worth every penny. Oh, I can't wait to check into your hotel. Oh my gosh, I can't wait. But yes, so thank you all so much for tuning in. If y'all have any questions, we're here. I know we kept you all over. As Tommy mentioned before, we can talk about this for hours because we live and breathe hotels literally. Yes. So our goal, we want to walk you through it and get you ready. Yep. And if you have any questions, let us know.
Thank you, guys. We appreciate your time. Enjoy the rest of your evening.
Thank you for this. This is helpful.
Yeah. I'm glad it was helpful. I'm happy to hear you said 3 months. Oh goodness, I'm here for it.
I have a call with you tomorrow morning, so we can talk more about it.
Okay. Oh, that's right. Yep. Thank you all. Thank you. We'll see you all next time. Bye, Tommy.
All right. Take care. Have a good night.
Talk soon. Bye.